Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse video that we do every week on Sunday at 7 p.m. sharp. Of course, today we are delayed because of some technical issue. I had to actually sort out a few things, but then it is regularly at 7 p.m. Well, this is a podcast that we do every week so that you get to know what happened in the market last week and what could we expect in the upcoming weeks. So, well, let's get started. Talking about the last week, I'm sure it was a euphoric week because the markets have hit a brand new record. Of course, it's just a number, but then yes, it is important that the Nifty did touch 23,000. So, well, it is actually close, very close to 23,000. So, at this point of time, the markets are absolutely euphoric motion. And it's like, your portfolio is also looking great if you have actually started investing quite some time back. But then one thing that you need to do at this point of time is something that we will discuss in a while. But one very important thing is that at any point of time, the most important thing is to have a right asset allocation. Absolutely. So let us talk about the most important asset classes available. So majorly, we can segregate them based on first one is a real estate, second one is commodities like gold and silver, three is equity, four is bonds, and five can be absolutely cash. So now, if you have done the right asset allocation, I'm sure you should be sitting with great returns in your investment because commodities like silver and gold has actually done really well in the last 2 years. Apart from that, we also know equities have been doing amazingly well, and now the best part is even bonds have actually done really well. And overall, if you see real estate also has been kind of picking up in India. So overall, every sector has kind of performed really well. Now, what is it that is expected in the upcoming months or weeks or years? So, very important thing, we always have discussed the importance of equity exposure and how equity exposure can give you great returns. So, unless you are actually really well off in terms of investments, I would actually say keep the real estate aside. Absolutely. So, other sectors are more than enough because that helps you invest small fractions of money and that helps you diversify easily. So we had actually done some diversification in gold investment and silver, and that has actually yielded great returns. And we are still sitting with gold in hand. In fact, of course, in the form of SGB, and that has given very good returns over a period of time. Along with that, equities, absolutely no doubt, has been giving amazing returns. So now, what is the question? So at this point of time, I would say those who were at higher risk appetite, I mean those who members who had high risk appetite would have invested most of their fund into equity. And at this point of time, of course, my advice is to kind of reduce your equity exposure in the sense if you have more than 60% of your portfolio, entire portfolio in equity, you should at least kind of do some partial profit booking, probably just to ensure that the markets can actually if markets see correction, we can actually have an investment. Well, does not mean that take out from equity and keep them your money or spend the money. It is important that it is diversified right. Now, where do we invest at this point of time? Is it gold? Well, gold is also at the peak of the price. Now, will it mean that gold will not go further? Nobody knows. But then, of course, investment into gold can be a good option in a SIP manner. And apart from that, bonds at this point of time, and if you're looking at even FDs are actually doing great at this point of time. But then that depends again on your risk appetite, how much you want to do it. But personally, I don't do that. Instead, I do it in liquid Bs or liquid assets like liquid mutual funds. So that's again a great option to have some diversification. And apart from that, one very important sector that we can actually look at is, of course, the most important thing, that is real estate. Now, talking about real estate, of course, like I told you, it depends on how much is in net worth and the total investments available. If you are able to diversify right and invest right into real estate, then of course you can go ahead with real estate. But then let me remind you, at this point of time, residential real estate across the country doesn't give any returns. So the if you want to invest in real estate, the only one suggested would be a commercial real estate. But then finding a great commercial real estate and then investing into it something is which can be a headache. But if you need support with that, again, you can connect with us and we can help you with that. Well, so that's one more thing that you can think of. But however, one very important thing is you should have some fund diversification because if we see a market correction, that is something where we can use the fund for. Equity, of course, gives the highest return, no doubt about it. But then you should have fun to invest at the right time, or simple, you should have money to invest on a SIP mode every month or every week or every day as per your choice. So that is something very important. Now, why am I talking about all these things? Well, the way the markets have actually hit an all-time high, 23,000, even before the election results, it kind of shows the kind of confidence the market has on the election results. And also, one important thing is the FIs have started buying in Indian market. Now, is this going to be a sustained buying? Is a question mark which nobody knows. We need to wait and see how the week is going forward. But then, I personally have even stopped trading at this point of time because the market volatility is over the peak. VIX is more than 20, and with all these things, it's not a great time for trading at all. But then the markets can actually make big move. Now, where the big move will come is on the higher side or the lower side is something that nobody knows. At this point of time, I would say this way with my experience that if the markets have actually done all-time high even before the election results, this is looking like the markets have actually priced in the win of the BJP government. Well, I'm not talking in favor of any government or party, but then from a stock market point of view, the market really looks for a stable government, and people have expectation that BJP will get more than 350 seats and make it a strong government. But then let us look at scenarios that could be expected. Well, of course, we've got some more time for the result. Result is coming on 4th of June. But let me tell you what could happen. One, BJP may get more than 350 seats. That could be a real positive. Markets have already priced in most of it, so we may not have a much higher rally. Markets may be subdued, maybe 1 or 2% higher movement, but I'm not expecting bigger move than that just for the election sake. Now, second thing is BJP doesn't get 350 seats and comes lower than expectation. That could kind of give some jitteriness in the market, but then still, as long as the majority is still with them, they still have the power. Markets may not break down much. But the third thing is where it gets a hung government, and that is where things can go a little into turmoil and people can get panicked, and that could see a sell off in the market for temporary reason. But however, like I've told you, the longer term view on the Indian economy remains very positive from my side, and because of that, if such a fall comes, I would be looking at adding more fund to equity because of that is my way of investing, and I've kind of reaped benefits of this kind of trade investing in my previous time also, and I would look forward to do that. So at this point of time, if you talk about my portfolio, yes, almost 40% of my capital is available invested in multiple other sectors, and it's available for deployment at any point of time. Now, that is what could kind of help us make great returns, and especially one very important thing I always say, the importance of asset diversification is something very key, and if you don't do that right, you can always get into trouble. So it is something that you need to do always, and for that, if you need support, of course, you can schedule a meeting with us at www.mpiinvest.com, and I, Srikanth Rajan, will sit with you, make you a great financial plan, and help you not only make the plan but also achieve it as and when required. So that is something that we help you with as a wealth management company. Now, coming to markets again. So this week, what could be expectations? So this week, we don't have any major event. Of course, there is a GDP data coming up in the US. Tomorrow, Monday, is a holiday in the US and Europe, a few parts of Europe. So markets will not get any global cues from there. Only Asian markets would be something that you need to look into. But in that case, we might see some subdued movement in Indian market. So that could be the expectation for now. However, since the market is at 23,000, which is all-time high, markets can tend to take some rest, and nothing wrong in that. But the next move will probably be decided by the results of the election. So that could be something that we could be watching out for. That is something that we could look at. Apart from that, there is nothing major. There's Tata Steel, I think, result one of the few last results coming up this week. But apart from that, nothing major coming in. The US GDP data would be coming out on Thursday, so that would be also a major focus. However, global markets are also running very positive. Globally, markets are looking really good. The best part was Nvidia, the AI chip manufacturer, has actually reported a great result last week, and that has led to great rally in the US market. So, my personal investment in Nvidia, which I had done almost 1.5-2 years back, is already sitting with more than 500% returns. Of course, I continue to hold it. In fact, I had even added few more quantity in the last 5-6 months. That also has overall done great. So, this point of time, my US portfolio is also doing great. Well, again, a question, if you think that you should invest in US portfolio, I would definitely not say yes until you have a great portfolio in India. So if you have not done that, if you want to think of how much you need to invest in the US market and how to do that, you can schedule a meeting with us again and I will help you with that as well. So that's it for now. I think we've discussed most of it about the election results part, and also we have kind of done a good asset diversification. With that, we should be able to create good wealth with our investments. So that's it for now. Wishing you all a great week ahead and a wealthy week ahead. This is Srikanth Rajan signing off until you catch up with more details next Sunday, sharp at 7 p.m. Goodbye. Have a great week ahead.